Welcome to the 2022 Economic Depression and Preparation channel. I'm your host, Tony. Thank you for joining me on this weekend edition, July 31st, 2022, the last weekend in July. Please be sure to subscribe to this channel for the latest financial news in the United States and sometimes beyond. And we will be encouraged to read all of your comments and to share them, shout outs online. So today we're going to be talking about the paradox of both inflation and deflation that's happening in this economy, as well as the housing market, just briefly, in terms of it's cooling down, but at the same time, there's still a short supply on the lower end, starter homes, for those looking to buy at a reasonable rate now with interest rates rising and things of that nature. So, not a financial planner, but I just want to get into some things with you guys. And consumer spending also, we're going to touch on that. Consumer spending for the month of June and July, consumer confidence, as far as all of us buying goods and services, only buying the essentials at different places is going down on a downward spiral. And so when we look at the deflation here, there's some deflation. Now they're saying CNBC was reporting that there's some deflation in Wingstop, noting chicken wing prices are down. As you know, that prices were up in certain food categories across the board, like in terms of eggs, meat, essential items, personal items, things of that nature. It was up across the board these last 2 or 3 months. But now recently, CNBC is noting that Wingstop's chicken prices have plunged 19% year over year. And they're saying that there's some deflation. Well, that may be true, but overall, guys, there is a massive food inflation, as you know, and there's massive inflation in gas. So what they do is they lower the gas prices, 4 or 5 cents. Average price of gas, according to AAA, is now down to $4.33, $4.32 a gallon for U.S. gallon. But they raise prices in other areas. So you go to the grocery store, and what used to cost you, an item used to cost you $5 or $6 is now $8 to $9, etc. And so while this may seem like a break, we're still seeing massive inflation on a bunch of goods. So they lowered the price on chicken, but they didn't tell you how they raised the price on fish. If you look at salmon, crab legs, any kind of seafood, it's higher than chicken. So they lower the price a couple of dollars on the little wings, the bags of wings, but they raise the price on the seafood, or maybe they raise the price on the pork or veggie meat. Veggie meat has gone up. Morningstar Farms, or if you eat Kind, Nature's Promise, or if you eat Impossible Burgers, they raise the price of that to $14, $15, $18, $20 a case, and you only get maybe 6 in the bag or something like that. So that's the thing you have to look at. Yes, they do they lower the price on one thing and raise the price on another thing. And this is what housing affordability is, plunges to the lowest level since 2006. The property market's great slowdown is here, says Bank of America. Well, they should know. As you know, it's going to get more expensive to borrow money. Interest rates continue to go up, even on loans that we're servicing now for our cars and other things, credit cards. The interest rates are slowly ticking up. Some cases by as much as 5% up from last month. And this is very concerning because now it's causing more to service the debt. People don't have the money to continue to spend on these things. The average interest rate since January on a 30-year mortgage has increased by more than 200 basis points. And remember, the Fed Reserve just started hiking rates these past 3 meetings. So we just started hiking rates this year, or the beginning of last year, December, November, and then we had 2 rate hikes since then leading into this third quarter. So we really haven't been in the hiking cycle that long, and the great slowdown in terms of what we're seeing in this economy is already starting to have its implications in the not just in the stock market, but in retail and in residential. Residential mortgages fell by 29% during the second quarter. That's down $14.5 billion according to the Bank of America. And so how are these builders, the big 5 builders in the USA, how are they going to handle a slowing economy? People's wages are stagnant and rising prices. That means less home sales and lower home sales. They're going to have to cut the prices down in terms of getting what they want. Opinion. This is from the HW meeting, housingwire.com. It says the end of the seller speculation in the U.S. housing market, what median listing prices in the top 250 markets can tell us. And you can see here, these are the top 10 hottest, supposedly, U.S. metropolitan areas in February 2022 here. You can see the listing prices are down significantly in all of these areas, like Connecticut, Florida, Naples, Florida, down South Florida, Conway, Myrtle Beach, South Carolina, North Carolina, down 18.2%. These are the listing prices are down. Punta Gorda, Florida, Cape Morals, Cape Coral, Fort Myers, Florida, Panama City, Florida. All these listings are down. Panama City is actually leveled. They're down. They increased 17.9%, but every other listing is down. As you can see here, Vegas is down. So this according to Realtor.com. So you can see the hottest housing markets out of the top 250 metro areas that they survey, the MLS and all of that. The valuations, the median valuations, grew, but the listings, on the other hand, are down. The median valuation listing price grew in the last 2-3 years since the pandemic started, and a little bit before the pandemic. People were listing 2 bedrooms, 3 bedroom, 2 bedrooms in Florida and other places for what, 400, 500K when it was only worth 200, stuff like that, 180 to 200. So we had this huge run up in listing prices and valuations, but now the listing prices are starting to come down here because of the situation that's going on with interest rates, everything going up, and it's becoming more harder to qualify for a mortgage at 4.5%, 5%, rather than a 2% that we were seeing or 3% that we were seeing previously. So guys, continue to hold the line. We will continue to see housing drops. This is going to be a gradual slide. This is not going to be an overnight thing where we wake up and the housing market drop by 30-40%. This is going to be a gradual slide, 5% each month going down in listing price, 5% each month going down, and people actively looking for homes to buy and purchase or invest or whatnot. So it's gonna be a gradual slide down. You're gonna see these listings staying on the market for sometimes up to 90 days, 100 days now because of the financing situation, which the banks control. So this is what we're going to be seeing in that market. Now, as we look forward to this week, there's still earnings season. Keep in mind that we're still in earnings season, earnings reporting season, I should say. So keep in mind to see that there's going to be a lot of revising the earnings to the downside as well, and to look for that, and a lot of massaging of the numbers in terms of this CPI index, the consumer price index, and the inflation numbers. Right now, inflation is holding at 9.5% and growing. According to the official numbers, it's double that according to the real numbers at 19%. We also have unemployment growing, so look out for that toward the end of this week. The jobs number come out Thursday, 8:30 a.m. Eastern time. Look for that number, the increasing and continuing claims and the increasing initial claims, and look for also the continued subsidies given to these corporations. So far, we had the chip maker subsidy that passed in the House, $280 billion given to them, as well as an Intel and other companies. Look for that to continue, and look for more mergers to continue. We had the JetBlue and the Spirit Airlines merger, more mergers to continue in the airline industry and the food industry and the retail and hospitality industry as well. Look for that to happen very soon. Have a blessed week. Enjoy the rest of your Sunday or wherever you may be, and I'll talk to you very soon. God bless.